Cathie Wood has never been one to follow the herd. Known for her bold forecasts and high-risk, high-reward investing strategy, the founder of ARK Invest is once again shaking the foundations of Wall Street. But this time, the headlines aren't about Tesla or Bitcoin. Instead, Wood is redirecting her focus toward what she considers the most transformative technological revolution since the internet itself: artificial intelligence. Her recent portfolio moves are making it clear. She's not pulling back from AI, she's going all in. In 2025, while most investors are still trying to ride the coattails of familiar giants like Microsoft, Meta, or even Palantir, Cathie Wood is quietly trimming those positions and doubling down on the infrastructure layer, the companies that are not just participating in AI, but enabling it. Let's rewind for a moment. Cathie Wood has a history of making predictions that seemed ridiculous, until they weren't. In 2018, she projected that Tesla would hit $4,000 a share, pre-split. She was ridiculed. Yet, by 2021, Tesla soared, bringing her vision to life and turning ARK Invest into a household name. She's made similar early bets on Roku, Zoom, and CRISPR, often investing when public sentiment was low and exiting after exponential growth. Now she sees another wave forming, not just a stock, not even a single company, but a new foundational layer of the digital economy: AI infrastructure. And while many investors are still trying to pick winners among AI software companies, Wood is shifting focus toward the hardware and systems that make it all possible. That's why ARK is selling down its position in Palantir, a stock it once called the future of enterprise intelligence. And it's why ARK is trimming Microsoft, a pillar of enterprise AI, because despite its leadership and integration of OpenAI technologies, Wood believes its stock price already reflects much of its potential upside. So, why Nvidia? For starters, Nvidia's data center business alone brought in over $60 billion in 2024, a staggering 280% year-over-year increase. That's not just impressive, that's generational growth. The company's GPUs are powering virtually every major AI model in existence, from OpenAI's GPT-5 to Google's Gemini to Meta's Llama. Nvidia's CUDA platform has become a moat of its own, allowing developers to build and scale AI solutions directly within its ecosystem. But Cathie's thesis goes beyond just the numbers. ARK's latest AI model forecasts that spending on AI infrastructure, covering everything from chips and data centers to networking and power systems, could balloon from $250 billion today to over $8 trillion by 2030. If Nvidia maintains its leadership across this value chain, its earnings could compound at more than 50% annually, setting the stage for a valuation that could rival or surpass $100 trillion over the next 2 decades. Yes, that sounds outrageous, but then again, so did Tesla at $4,000. This isn't just about growth, it's about dominance. Nvidia isn't merely a chip maker anymore, it's positioning itself as an end-to-end AI computing platform. Through its Blackwell chips, its DGX supercomputers, and its emerging AI-as-a-service offerings, Nvidia is creating a vertically integrated business model that mirrors the success of Apple's ecosystem. Every layer, hardware, software, services, feeds into the next. Gross margins are already approaching 75%, and its future revenue streams may not come from one-time chip sales, but from recurring AI platform subscriptions, AI cloud services, and even the orchestration of autonomous factories. In ARK's eyes, Nvidia is not just a vendor. It's the backbone of the AI economy, and this is just the beginning. Wood is betting that as industries from logistics and defense to finance and healthcare scramble to integrate AI into their operations, Nvidia will become indispensable. Every major player, whether it's Amazon, Meta, Microsoft, or a next-gen AI startup, needs Nvidia's architecture to train, deploy, and scale their models. In this world, Nvidia becomes the toll booth operator on the AI superhighway. And in Cathie's bull case, that toll revenue becomes a compounding stream of global dominance. But Cathie Wood's conviction doesn't stop with Nvidia. Her trades show a strategic rebalancing toward multiple players across the AI ecosystem. ARK is buying AMD, which it views as Nvidia's primary challenger, especially in data center training and inference with its MI300X chips. ARK made at least 10 separate purchases of AMD stock between late 2024 and mid-2025, including multi-million-dollar buys that suggest long-term confidence. Then there's Shopify, perhaps a surprising addition at first glance, but Wood sees it differently. In her view, e-commerce will be redefined by AI through smarter logistics, personalized recommendations, and adaptive customer experiences. Shopify is embedding AI directly into its platform, creating defensible moats against Amazon and other retail giants. ARK's repeated accumulation, including a nearly $11 million buy in late 2024, confirms this is more than just a side bet. There's also BYD, China's electric vehicle leader, which re-entered ARK's portfolio after a long absence. Why? Because BYD isn't just a car company, it's a vertically integrated AI and EV powerhouse, developing autonomous driving platforms, smart battery tech, and domestic ChatGPT competitors through its ErnieBot system. ARK's recent $15 million re-entry suggests Wood views BYD as a key player in the East's version of the AI race. Even Robinhood, a fintech platform many had written off, is getting renewed attention from ARK. While not an AI company at its core, Robinhood is integrating AI across user experience, portfolio management, and customer support. And with a younger user base and expanding product suite, Wood is betting it will capitalize on the democratization of financial tools driven by AI. In the end, Cathie Wood's latest repositioning reveals a grander narrative. She's not just investing in AI as a theme, she's architecting an AI-first portfolio, a diversified long-term bet on the infrastructure, the platforms, and the applications that will reshape the global economy. It's a playbook we've seen before. Take bold positions early, endure skepticism, and ride the wave as the rest of the market catches on. She did it with Tesla. She did it with Bitcoin. And now she's doing it again with Nvidia and beyond. For Cathie Wood, this isn't about playing it safe. It's about identifying the exponential. And if her past is any guide, the moves she's making now could define the next decade of investing. So here's the bottom line. If you're only focused on where Nvidia and AI have been, you may be missing where they're going. Cathie Wood isn't just betting on the next big thing. She's betting on the next foundation of everything. And this time, the stakes and the upside may be larger than anything we've seen before. In addition to Nvidia, which Cathie Wood believes could become the backbone of the AI revolution, ARK's aggressive moves into AMD, BYU, Shopify, and Robinhood suggest a deliberate effort to construct an interconnected AI ecosystem within her portfolio. Each of these companies represents a key node in the future digital economy. AMD, as Nvidia's most credible challenger, is being positioned as a critical alternative in AI chip supply. Its MI300X accelerators are aimed directly at the growing market for data center AI processing, and ARK's repeated high-volume buys show that they see AMD playing a central role in democratizing access to AI compute. Meanwhile, BYU, or Baidu, which had long been absent from ARK's portfolio, has made a striking comeback. As China's AI champion, BYU is building an ecosystem akin to OpenAI's, with its ErnieBot becoming a dominant force in the Chinese-language AI space. For Wood, this isn't just about technology. It's a geopolitical hedge, ensuring ARK's exposure to global AI development isn't limited to the West. Shopify is another surprising but strategic play. While it may not look like a hardware or AI research company, its behind-the-scenes integration of AI across personalized shopping experiences, logistics optimization, and automated customer service is reshaping e-commerce. ARK's repeated investments underscore its belief that AI will define the next generation of online retail, and Shopify is positioning itself as the platform of choice for small and mid-sized businesses in that AI-driven future. And then there's Robinhood, a company not known for building AI, but for embedding it. From AI-powered customer support to automated risk assessment and investment education, Robinhood is using AI to make financial tools more accessible and intuitive. In an age where financial behavior is increasingly influenced by algorithms and AI agents, Robinhood could become the front door to an entirely new kind of retail finance. Together, these bets reveal the full picture of Cathie Wood's AI thesis. Nvidia might be the arms dealer of the AI boom, but AMD provides competitive balance and upside in the compute layer. BYU brings geographic and linguistic diversity to the equation. Shopify anchors AI in real-world commerce, and Robinhood channels it directly to the everyday consumer. Wood isn't just placing isolated bets. She's assembling the digital scaffolding of the AI-powered economy. Each investment is a piece of a broader AI framework that spans across geographies, industries, and user experiences. This isn't a passive index play. It's a forward-looking, high-conviction portfolio based on exponential growth and disruptive innovation. And if Cathie Wood is right, then this isn't just about finding the next Nvidia. It's about owning the digital DNA of the 21st century.